Hey there, Jeremy Goodrich. Welcome to the Shine Insurance YouTube channel. Another video short from my interviews with real estate investors on the REI Clarity podcast. This interview is with Billy Keels, and we talk about diversification of your real estate assets. Now, diversification is a good idea in your investing strategy across the board. You might invest in stocks, bonds, other kinds of things in that space. You might invest in real estate. You might invest in other places. You might stock money under your bed. Not that I think that's a good idea, but I suppose that could be a way to diversify as well. Diversification is really important. And I asked Billy about how he diversifies in real estate because he really goes pretty broad in the investing he does. He's not just in multifamily. He's not just in ATMs. He's not just in office. He's in a lot of different asset classes. So I said, why do you do that? And what do you think are the pros and cons in that? So you'll come away from this short conversation with a better understanding of how to diversify inside of real estate. So without further ado, my conversation with Billy Keels. Okay, so the last thing I really want to talk about is the idea of diversification. Now, we're in the space of real assets, and so obviously we've zoomed down into that a little bit, but you are pretty well diversified in real assets. You talked about equipment, you talked about ATMs, you talked about real estate and mobile homes and apartments and things of that nature. There are some folks that say you really should be zoomed down into more specific of like one asset. What's your perspective on diversifying and the value there?
Yeah. So, and I think a lot of that comes back to, once again, the context and the individual. So if I look at myself now as a syndicator, right? One of the things that people count on me to be able to do is have a network and be able to bring them multiple different types of opportunities. Totally. Now, I could very easily say, well, yes, I just want to do larger multifamily apartment complexes. And I know a lot of people that just do that, and they're very successful at that. And they do it in multiple markets, right? Multiple locations and things like that. There are other people, maybe like me. I have other people that have been inspired by to realize that, hey, listen, I have a unique gift and talent, and that is to be able to go out, recognize, build relationships with people that are extremely well versed in what they do. And so, if you are someone who is a syndicator or a syndicator or a general partner or a sponsor, I feel like it's one of my responsibilities to make sure that I'm understanding in this real asset space, what are the different opportunities and who, most importantly, are the absolute best operators in what they do. Because if I'm able to then go back to my group of investors and say, hey, listen, there's an amazing self-storage opportunity that is going to be able to provide you with XYZ, and then that provides them the opportunity to also be in a real asset. It's something that they can feel. It's something that they can touch. It's something they understand. And it's maybe in a location where they're not going to find a piece of equipment that helps with carbon recycling, right? It's just, they're just different things. But at the same time, when I can say, well, listen, this particular opportunity in a multifamily apartment building is going to help you. It's going to give you a return, and it's going to help you with your passive income loss. Well, that's one thing. And then also I can go to my high net worth individuals, my high wage earners, and say, hey, listen, there's another opportunity that also exists in the marketplace. It's going to give you strong double-digit returns. It's going to help you to also bring down your tax on your ordinary or earned income, right? And everybody has to talk to their tax attorneys and their people to find out what fits. But my role as a syndicator is to be able to bring them opportunities that would make the most sense for them. So I think, so I would say as a syndicator, that's something that absolutely can make sense. If you're talking about an operator who today is jumping in and working in that owns a gas station, then tomorrow is in multifamily apartment buildings in a different place, and then three months later is it. So hopefully that, I think when you look at it from a contextual perspective, if you're a syndicator, yes, you can go really, really deep and you can understand because you're working on one thing all day, every day. At the same time, I think there's also a lot of value, or I know there's a lot of value in being able to understand who are the absolute best operators in a specific area. And is there a way that I can forge a relationship with them and then being able to help them because I'm able to bring other people, other investors who are interested in placing their capital. They want to continue to operate and focus on that. And my investors are interested in finding the best opportunity for their capital.
I love it. And it's, I think separating out the difference in the term operator and the term syndicator really helped in the conversation we had right before this one to understand what you're saying, like to be able to offer your investor multiple ways to make their money work. And obviously over the course of time, which one is the best option might change. There may be great opportunities in apartments in Ohio this year, and that may change next year. And so the more a syndicator, the more the person who is presenting those ideas to investors can explain what those opportunities are, can explain the value of those opportunities, not just from a cash flow perspective, but from a taxes perspective and from a long-term investment perspective, the better that investor can say, okay, this is what I want to do right now, or this is part of what I want to do. And then I want to do something else with this other chunk of money or some other investment strategy. And therefore you become diversified inside the space of real assets. And I think that's great. Now, if you're an operator going out there trying to do all those things, whole different conversation, whole different story, not what you're looking for.
I would think you're definitely not going to be looking for that from an operator's perspective. And keep in mind, Jeremy, there are people that, even though I am, so as a syndicator, you may have 3 or 4 strong partners that you work with. Like you're not opening up your jacket and have like 50 different things.
Yeah.
At the same time, you may have investors that say, you know what, I only want to invest in this piece of equipment because it provides the type of result, the benefit that I'm looking for. Even though, I know you do that other stuff, but I'm interested in this and then this type of relationship because it provides me as the investor what I'm looking for.
I love it. Yeah. And so by providing those opportunities, you gave the investor the knowledge and ability to have clarity about what they wanted to do. And whether that was one thing or whether that was multiple things, you provided those opportunities and then they decided what made the most sense. Hey, Jeremy here. Thanks so much for watching this video. I hope you enjoyed it. I hope it created some clarity for you and zoomed you in on what action steps you actually need to take to succeed in real estate. If you haven't done so already, please head over to reiclarity.com and download our 9 action step framework. I believe that every real estate investor needs to take these 9 steps to succeed at the financial freedom they want to create for themselves. So if you haven't downloaded that already, please head over and get that at reiclarity.com. All right, until the next time, have a wonderful day.